Hello and welcome to the Globalist Finance. So right now we're going to talk about the ZIM stocks. Of course, I know ZIM stocks is a bit wounded right now, but we're going to analyze that deeply. We're going to talk about deeply with different point of view, and we're going to check if ZIM is really a good investment, a bad investment, or should we wait? Should we forget ZIM? We're gonna to talk about that. So let's begin. So here we are on Trading View site, and that's the chart of ZIM in this year, beginning 2022. So we can see that the ATH was reached in March, in the mid of March, and the price was $90. Do you imagine? That's pretty big for ZIM. So the price pumped after earning and revenue. The price dumped. I don't know why. I didn't analyze so much right now, but here in August, I'm focusing on August. The situation is pretty bad because the earnings are surprisingly low. The prediction were higher than the reality. So the earnings, ZIM released this earnings and revenue, and the markets take time to react. But when they react, the price dumped a lot. So the price dumped for $20. The price was already low for ZIM at $50, and now the price is surrounding $30. So I'm surprised that ZIM dumped as fuck right now. So since the ATH, ZIM has lost a lot in the stock market. So we can say that there is extreme fear about ZIM integrated shipping services. So we're going to analyze that. Why there is this fear? Oh, okay, earnings are bad, but why they dump on $20? That's too much. I mean, too much. They released the dividend. I don't know why the price dump so much. So we're going to analyze that on Simply Wall Street. Don't worry if you need the website to analyze, to check news, to check earnings, and all of that. I'm gonna to make a big video where I'm gonna to give you all of website by categories that I use to analyze companies. So here in Simple Wall Street we have the report of ZIM, and we have a visual overview of ZIM report, financial report. So they use a snowflake right now, like you can see, on value, dividend, health, past, and future. So as we can see in the future is pretty bad for seems pretty bad for ZIM. Their analysis 0/6, so the future is pretty suck. But we're gonna to check that. Don't worry. So the ZIM performance has a little chart with event that happened. Okay, so we have the event. That's pretty cool. Here we have the recent news, and this article we're going to analyze that furthermore after. We have here a pretty good dashboard, the price volatility and the shareholder return. So we're going to see full shareholder return, and of course we're going to include dividend because dividend are pretty high in ZIM. So in the 5 days there is a dump in industry also, and in the market. That's pretty normal on 30 day for 1 month, for a quarter. Oh, a quarter. Yes, ZIM underperformed a lot on 1 year since their IPO, because they are in the stock exchange since 1 year. I mean, so they done. They underperform a lot. So why they underperform? We're gonna have to check that right now. So there is a bit about the company. Here we have a interesting fact. So the PE ratio is 0.6. So that's fucking good PE ratio. We have the revenue. that's that's 10 what 10 billion over the market cap. That's pretty high. I never seen that ever. I never seen that before. And their earnings are double high of the market cap. So that's pretty high. Earning and revenue. So the actual earning per share is 51. The gross margin, net profit, and the debt equity ratio. The current dividend yield is so high, and the payout ratio is surprisingly low compared to the dividend yield. But we can explain that with this surprisingly high earnings and revenue that's beating the market cap. So that can be explained by that. The valuation, so the P ratio, the price to sales, the price to book, and also, as we can see, the PEG ratio. So the price to earning ratio against the peers, against the competitors on the market. So there is Golden Ocean, Starbuck, Matson, and Navios. So the P ratio is pretty good against the peers. So we're gonna to check out the forward P ratio, and the forward P ratio uh, is pretty good. So ZIM is always on a good P ratio. The P average is 2, but the competitor are pretty out. Okay, that's checked. That's good. Okay, the price to earning ratio against the total industry is of course lower, so that's good. But the estimated growth is fuckingly bad, as you can see, less 80%. Do you imagine that's pretty high? That's pretty low, sorry. The price to earning ratio against the fair value, the fair ratio, is the half of the fair ratio, as I can see. And here we can see that the share is pretty undervalued. So the fair value is about $150. About, that's an approximation. We can be sure about the fair value, but the current price is 80% undervalued that the fair value. So pretty good, but the future growth is 80% in there. So what's the good thing? I don't know so much. The analyzed price target. So here we have the low. Here the average one per okay. Target price is more than 20% higher than the current share price, but analysts are not within a statistically confident range of agreement. Okay, there is of course a fear with the analyst, but the price target is minimum 20% higher than the current share price. The future growth, so we're going to check that because that's the most interesting things about ZIM. The earning and revenue growth forecast are lower and lower to the future forecast. The market is growing, the industry of shipping, and we're gonna talk about the market, the industry of shipping, because that can explain the fear. So the industry will dump a little bit, but the company will dump a lot, and that's the revenue that will dump. So ZIM are forecast to decline over the next year. The earning per share growth forecast. Okay, the earning per share we will. Oh. The earning per share we dump a lot, and the future return on equity. Okay, it's going to be lower. The past performance are pretty good, but I don't going to stay here so much. We're going to check financial health, and that's what surprised me a lot when I discovered ZIM is the forecasts are fuckingly bad, but the financial health is pretty good. So on the short term and the long term, that's a balanced financial health, as we can see. The debt to equity was really bad since the beginning, since 5 years ago, and on 2021 they make a great pump on the equity, and they use that opportunity to pay out a part of the debt. So the balance sheet, look at the debt. The debt is so low compared to the equity. So the financial health of ZIM is pretty good. The dividend is fuckingly high, and nobody can overperform the dividend. Maybe the Russian stocks, but right now ZIM is fuckingly high. Maybe the first on the market. The stability and growth of payment. Of course, ZIM is not stable because their IPO were just 1 year ago. The dividend are fuckingly high. The forecast is pretty bad for the company. So, I mean, that's not so stable right now. That's a bet to invest in. So the earning payout to show, as we said before, the cash out paid as dividend and cash flow retained. That's pretty important, the cash flow retained. So to reinvest in technology, in all of the company needs to have a good forecast. Okay, Ali Glickman, CEO, as you know. So this website is pretty good to analyze that. I will give you the link in the description, of course, to analyze the stocks. But the forecasts are maybe bad, but the financial health is good. And why should we forget ZIM? ZIM is maybe an exciting bet for us. It is not a stable dead investment, as we can see, because the forecast is pretty bad, and not only for the company but overall for the market. So we're gonna to check out why the market will down. So in the Bloomberg, of course, don't worry, all the link, all the page, all the article, all of that I show you right now on my video, I give you that on description. So container lines brace for slowdown as shipping rates kill over. As container shipping lines in general, this week the World Trade Organization's merchandise trades flow slow the past quarter, likely stay weak in the second half. Okay, so you will have the article on the description. That's a great article from Bloomberg. So there was a great pump during the pandemic, or just after the pandemic. The shipping sectors has a great fuckingly pump, and now they may be slowed down because they have challenges to face. And as we can see, the World Economic Forum, the famous World Economic Forum, and we won't say why, is going to talk about this supply chain to reach net zero carbonation. Of course, the shipping sectors needs political support. So I mean, the great challenges of the sectors is the decarbonation, is the environment problem. So of course there is other economic problem, geopolitical issues, because this sector is over sensitive to the geopolitical problem. So the great challenge is it is of course environment. So the maritime shipping carries environment of the goods of that the global economy moves around. So the first line proves us that these sectors can be ignored. For 80% of the goods that the global economy moves. If if the industry of shipping dumb down and crash, that the global economy that will stop. So that's pretty impossible. That's maybe why they will have a political support according to World Economic Forum. So, but the problem of that is that they still account for around 3% of the global emission of carbonation. So that's pretty bad. And they plan for 2050. They have a plan. So the decarbonation will be great. Okay. Airs. Okay, so I will give you, of course, the link in the description to go further with that. But I mean, the market will face great challenges right now and over the next years. But I mean, maybe near 2030, they will pump because the challenges will be faced and they will win. The industry will win because ZIM and all over actors on this market are concerned by the carbonation. So they need to change. But they will change. I mean, they will change. So now we're gonna to talk about the seeking alpha article. So why the ZIM 80% dividend is not too good to be true. I won't read that to you, but the summary of that article is that ZIM is a really good company, is with a balance sheet really fuckingly good, with technology, and the forecast analysts are maybe wrong according him, because they retain a lot of cash, they paying out their debt, they have great dividend, that this dividend they can support the dividend. So why should we forget ZIM? You know, cash king at ZIM, consistent earning growth and low leverage ratio, so much caution. Okay, as you can see, so there is not so much issue on ZIM, and that not so much red flag that make us bearish, to this company. Competition, of course. So you can read this in description. That's a great article. They speak about competitors, but the wide moat is that ZIM is a technological company. They have technological advantages. They use technology a lot to face environment problem and to increase the speed of the boat. So that's pretty good. And don't forget that ZIM can't face a great problem if there is a great economic problem, because ZIM do not manage their own boat, because that's a leasing company. I mean, so that's the client that they care about their boats. So that's pretty good for ZIM. So the link will be in the description. So is ZIM integrated stock a good long-term investment for its dividend? Cash is not appears. So the summary is ZIM integrated yields upward of 30%, as it's said, to earn as much net income as the market cap. If you exclude lease liabilities, the company has net cash equivalent to 8 to 90% of the market cap. It is unclear if bank deposits should be included in the calculation of net cash, as management has not given any indication that those funds are available to shareholders. Okay. market. So as investor plays, there is too much of a price into ZIM integrated shipping stock. So right now, to conclude this video, ZIM is a really good company with a financial health really good, with forecast not so bad but not so good also, and they have challenge to face for the next years, so the price may dump a little bit, but they will pump a lot to the next years, I think. That's my opinion, so I'm not a financial advisor, so don't take that at the first later. So please check out the link in the description. Don't forget to subscribe to my channel for next videos, and bye bye.